Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of US markets pre-market open on the Monday, the 9th of November 2015. Okay, right. This is a video brought to you by CFDs.com. Please visit the specialists in spread betting and CFD brokerage. You can visit them on CFDS.com. Alternatively, you can visit the educational site, which I obviously post my analysis daily and my insight, etc., etc. at www.cfds.education to certainly learn more. Okay, let's see exactly how we need to tackle the US markets post NFP. Okay, now just a summary of the events thus far. European markets are lagging, really. I mean, the article on ft.com certainly reveals all. European equities lose momentum, even though Asian markets were higher overnight, although the Hang Seng was negative. The Nikkei up 2%, the Shanghai up 1.6%, but the European markets are lagging. Now, the main reasons why the European markets are lagging, even though we had stronger German data this morning, and Eurozone Centix investor confidence certainly was rising, is the fact that we have obviously hawkish Fed certainly remains the major concern. Okay, we have Volkswagen concerns. Obviously, we all know the situation there in terms of the actual effect it's had on the actual German growth model. Okay, now there is a talk with regards to a potential company suing Volkswagen. So again, that may well be the fact that it's under pressure. Now, there has been an article circulated by Reuters with regards to a deposit rate cut of 0.1%, from what I understand. So maybe that certainly is negating the potential of QE obviously being enforced. Now, I have said, and I have explained this, the fact that the Fed is hawkish. That means that the BOJ and the ECB no longer have to do QE because the Fed is doing QE for them, i.e. is forcing their currency down. Okay, so they have the ability to save their ammunition for another day, and therefore that equates to a euro rally. Euro rally equals bearish for equities, etc., etc. So if you put everything together, fit the jigsaw puzzle, it certainly makes sense. Okay, now we've obviously had weaker Chinese data as well, so Chinese imports certainly have fallen drastically. So again, that's negative for European exports, and hence the reason why European equities are certainly under pressure as well. These are all theories, okay? These are all theories from a fundamental perspective, and explain as to why the actual equity markets in Europe are lagging. We also have the CBI downgrades, UK growth of 2.4%, BHP certainly under pressure given the mining disaster in Brazil, and concerns over Greece and Spain. Okay, so Catalan independence, and obviously the loan tranche being delayed to Greece. So these are all factors that are concerning, or is a concern for European equities. Okay, let's try and decipher the reason as to or the price action, should I say now, in terms of the potential scenarios that can occur. Now, look at the S&P 500 on a weekly basis. You can see that we put in a potential topping tail there, certainly a wick on the weekly chart, so it rejected the highs. The daily chart, as we all know, let me just add in the volume here as well. Actually, not moving average. 1 second. Okay, I don't know why this keeps disappearing on me each time. Okay, so let's add this in as well. Okay, so certainly a rise or pickup in volume on the sell side, bottoming tail, doji, etc. Call it what you want. You basically have a break of the rising contracting wedge pattern. This key trend line certainly has broken to the downside, and therefore that would exercise caution, and certainly is a concern for traders. Now we have lower lows, lower highs. So the pivot high at 2099, 2098 has held. Currently futures are indicating 2092, so therefore a risk-off scenario. Okay. So that's how we're interpreting the actual price action thus far. So lower lows and lower highs. The trend of higher highs and higher lows certainly has come to an end, as you can see here and here. So certainly higher highs, and this bullish channel certainly has broken to the downside. You have an unfilled gap at 2052, and that certainly remains the main concern. Now, in terms of a potential H&S formation, one can conclude a H&S here. Okay, so this is a hypothetical scenario in terms of the market putting in a lower high, okay, which I've explained, and you're looking at a H&S. So your left shoulder obviously is already there, your head obviously has been accumulated over the last 2 or 3 days, and this thrust higher here triggers a H&S. Now if the H&S is triggered, you're H&S target, I'll just project for you as well. And the reason why we're projecting this H&S target, number one, weaker Chinese imports certainly hurts US exports. Stronger jobs data indicates obviously the Fed green light for rate hike come December. And obviously concerns and the lag in Europe confirms a weakness as well. Commodities under pressure, etc., etc. So several factors for this H&S to be triggered. H&S formation on the S&P equals a pivot high of 2116, taking the neckline down to 2082. Okay, so therefore you're projecting a move of almost 18 points here at 16. Okay, so certainly looking at a potential move here. Just bear with me. Let's just calculate this for you. Okay, so 2082 minus the 34, that takes you to 78, and you're looking at a 48 on the downside. So 2048 and abracadabra, 2048 is more or less in line with the 2052 gap fill. Okay, so that's no coincidence, folks. Okay, certainly no coincidence at all. Okay, so certainly watch out for the right shoulder. That's what my eye will be on today. Using the fib retracement ratio, taking it from the head to the neckline, you'll obviously have retraced up to the 50% post NFP, etc. So certainly a digestion phase, and certainly a sell-off is expected going into obviously US markets. Okay, so bear that in mind. The unfilled gap at 2052 and H&S target at 2048. Okay, this is just basic technical analysis and the ability to read between the lines. Okay, now the S&P 500 on the 10-minute chart, your resistance level obviously is at 200 MA, 2099. You have resistance at 2101, 2104, and then obviously you have resistance at 2108. Okay, on the downside you have support potentially at 2083, and then obviously you have this gap level support here, which the gap has not closed thus far, so bear that in mind. This was the market open. Let me just confirm if I've got this right. 1940 and 230. Ah, yes. Okay, that was the actual clock changing. Okay, so gap fill here is currently at 2079. So that will potentially be your first target in terms of gap fill. Okay, so bear that in mind. Gap fill at 2079. Okay, then again you have support again, like I said, at 2083. So that certainly needs to be respected. You do have horizontal support here at 2084. So a lot of support in terms of 2084, 2083. So certainly expect a battle if you are short at 2083, 2084 before the market eventually gives. Okay, so again, that's your they are your levels in terms of your horizontal support and resistance. Now let's cross verify the actual US market analysis onto the Russell now, and let's see exactly how the Russell is performing. Bear with me. Okay, let me just bring this up. Okie dokie. Where art thou, Russell? Okay. Art thou, where are you? Okay, this is the actual daily IWN. Okay, IWN certainly is coming into horizontal resistance. You do have the 200 MA as well. So that's certainly something. Previous support equals resistance to 200 MA at 99, so that should be interesting. But given the fact that we've had weakness thus far, we are looking at further downside. Okay, so the Russell is here. Okay, here we go. Okay, so start with the weekly chart first of all. On the Russell, it's certainly an impressive thrust higher. Okay, so that certainly needs to be respected in the Russell. It certainly is starting to move higher, and mainly because of the fact that it is predominantly weighted towards financials. Okay, and given the fact that we are talking about a interest rate rise, that obviously helps the banks, and that's why you're seeing a thrust higher there. Okay, let's just bring up the banking sector. This is going to be quite interesting actually. Let me just bring up XLF 1 second, and let's just see if that theory holds true. Okay, XLF, SPDR financials, there we go. Yes, that certainly does hold true. Okay, so given the fact that we have had this thrust higher, now bear that in mind, you have a gap here, so S financial certainly into gap fill resistance as well. So what do you conclude from there? You conclude that the financials certainly have baked in the bullish news now, and they've certainly baked the fact that you are looking at potential rate hike as well, and therefore you are looking at further weakness there. So that's something certainly to consider as well. You do have previous support equals resistance at this juncture as well, but gap fill really on the XLF is really hitting the or putting the nail in the coffin here in terms of any potential continued fuel higher on the S&P 500. Okay, so or even the XLF, or shall we say Russell itself, given the fact that if we hold a theory at Russell obviously is higher based on the financials. Okay, something that I read over the weekend, so certainly something just to cross-verify and cross-check. Okay, so the Russell itself, as you can see, if I go back to Russell daily chart, is into gap fill. There you can see you do have one more gap above with the 200 MA as well. So again, we'll watch out for that, exactly whether or not they can fill that. Certainly is a high probability that it can, so that's something that I'm going to remain open to. Okay, especially given the fact that Shanghai and the Nikkei obviously are higher overnight. But having said that, the European equities are lagging, and therefore the risk on bottom certainly is not being confirmed. Excuse me. Okie dokie, right. So the 60-minute chart of the Russell, in terms of cross-verifying, we still remain bullish. But again, like I said, you are into gap fill resistance in the Russell. So therefore, you are halting your tracks. Now, it's certainly a bullish channel, so one should not ignore that. And you have to respect price action for what it is. Okay, a 10-minute chart, you have a rising contracting wedge pattern, obviously slam bang into the gap fill, potential topping tail into the close. Again, these are all factors that you must consider going, and also given the fact that you had a rise in volume as well on the sell side, that's certainly a cause for concern going into the obviously price action on Monday, or Monday's trading session. So again, indicating exhaustion and indicating resistance from my perspective. So short-term pain, and then we may well get long-term gain. But for now, it certainly is a major concern going into Monday's trading session. Okay, which is not long now, starting very shortly. Okay, now let's cross-verify this now in terms of the Dow. Let's look at the Dow itself. You still have the H&S formation, the Dow. Still red candle dictates and controls market sentiment and market movement. Again, you have a break of the rising contracting wedge. Dow Transportation, now again, the Keystone Pipeline deal is a major factor, and that will dictate the next move in terms of Dow Transports. But still, we remain lagging on the Dow Transports, and it certainly remains weak, as opposed to Russell, where it started to confirm the move. That the Dow Transports certainly are not. The last indices is the Nasdaq. The Nasdaq is the key. The reason why is 46.95 is your previous resistance equals support level. If that holds, the market holds. If that fails, then you are looking at a gap fill below at 45.07. So certainly expect weakness on the downside. That's my interpretation of events. Okay, on the Nasdaq itself, 60-minute chart. Again, you still have this H&S formation. We're still below this neckline. We are consolidating, and then we are looking to break below. Now, we are not respecting this trend line, so I'm going to get rid for now. The only trend line that we potentially have is obviously this one here, where the market was supposed to hold, and we were in a potential bullish channel until we broke. Okay, and all eyes on the Nasdaq for now. So this bear flag, this red candle here on the 5th of November, we're consolidating within that, and we are looking to flush on the downside. So therefore, bearish price action expected. Okay, folks, certainly expected. Right, in terms of the actual cross verification phase now, in terms of the semiconductors, to see if that weakness is supported. We are obviously, in terms of the semicons, we are lagging again. Okay, in terms of semicons, 60-minute chart again has a H&S formation. The right shoulder certainly is there, i.e. a lower high, and expecting further weakness on the downside. In terms of the biotechs themselves, we did put a bottoming tail on Friday, so certainly some support, and that's one of the reasons why the Nasdaq held above 4,700. But again, that's going to be tested. Ever since we've closed the gap on the biotechs, we've held that diagonal trend line. Certainly have seen weakness. So again, we'll see exactly how that trades on Monday. And also with regards to the biotechs, you have this H&S formation too. So again, we're going to see exactly how this market is looking in terms of this right shoulder. You have this left shoulder obviously is in. The biotech certainly did show some resilience. We did bounce, and we'll see whether or not we can sustain this bounce. Any bounce will be subjected to gap fill resistance, which is here. So all eyes on the biotechs. Okay, folks, in terms of the movements. But again, overall bias negative. Why? Because obviously you have Chinese imports dropping. You have Fed hawkish, European markets lagging. Certainly is not looking good going forward, although biotech certainly remain more stronger than the semicons. And the Nasdaq, again, like I said, it's all about that 46.95 level, and the 60-minute chart has a potential H&S formation. 10-minute chart resistance in the Nasdaq, you have 47.07. If that breaks, then you have 47.26. Support seen at the 46.65 level below. You do have an unfilled gap that needs to close, which is currently the actual market hours change. Obviously, gap is at 46.50, and all eyes will be on that gap going into Monday's trading session. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs and remain cautious. Overall, bias is now indicating towards the downside, especially given the fact that we've had further hawkish comments from, I think it's Mr. Rosenberg, if I can remember correctly, and that certainly is sending oil prices lower, and the European markets are lagging as well, so bear that in mind. Okay, goodbye, take care.